Let's make this video quick. I wanted to talk about some stuff here. What I see possibly happening next year. Um, and what, is every September, October, just about other than 2024 because of elections. So they want things good. There's anticipation. There's, rate cuts usually before every election, just about. Doesn't matter who's in. But every other time, October was atrocious. It was horrible. And if October wasn't, then September was, and it was a bounce from September. Or it started to peel off late September, and we got destroyed in October. So, back when SPY was in the 400s, we were doing $50 moves to the downside. So I think that this is just a minor correction, and I wanted to talk about what I possibly see coming next year. All right. When we started cutting interest rates before, we did a quarter point, then like a half point. The bond market wasn't buying it, and we just stayed, it was saying, I'm not buying this. And then we held. Okay, 99. We raised interest rates, then cut them, then the dot-com crash happened. All right. This is what led to the houses being all of a sudden profitable and traded like rare Pokemon cards where everyone's like frantically buying and all that. Is because rates dropped really low. Houses began profitable for the first time, or like profitable to buy them and rent them out where you can make a really decent return, and there was appreciation. Raised interest rates. Okay, then we cut them in 2007. All right. What followed? The GFC, Great Financial Crisis. Raised interest rates. Now this one's weird and mystic and spooky. Then we cut them, and then COVID happened, and, and the market fell. Now, it didn't make COVID happen, but it still, we still raised them, then cut them, and then something happened and the market dropped. So we take out all the factors on what happened and why. We raised them, then cut them.com, raised them and cut them GFC, raised them and cut them COVID. Now, you can't count that one, but it's still, if we take that out, why it happened. We raised them, now we're cutting them. So the market, in my opinion, is rallying. This is the federal funds effective rate. Market is rallying. One of the reasons the market is rallying is the anticipation of rate cuts, especially Mr. Too Late getting out. But it's kind of pricing all that in my opinion. So I think if we're going to get a new Fed chair in, and he's going to take it slow and slowly cut interest rates, which is horrible for the economy. It's already too late. At the end of the day, guys, we need a collapse, and we need everything to fall violently. Housing, cars, that's already happening. We need the price of everything to go down, and go down real hard right now. So, and housing was horrible over in here with high interest rates. Same thing over here. Place I'm living at is just not that far off from where it was in 07. It wasn't worth anything till over in 2021. That's off topic. Raise interest rates, drop them. .com raise interest rates, then drop them. GFC raise interest rates, drop them. Crash of COVID. Raise interest rates, dropping them. I expect something bad to happen. Not this month. People are like, "Oh, is this it in a week?" The new traders zoom out on a higher time frame. So I think that next year, I think we're gonna drop. We could have a decent drop this month. We'll have some rallies, and some drops in the market. But with the tariffs going into effect November 1st, if this happens, that's when the market will rally. People will be waiting to buy puts then, and they'll be like, "What is going on?" Right? It's pricing it in before it happens. That's how the market works. It prices it in before if it's known. We're pricing in what's known in the future here, going into 2026, possibly 2027, of rate cuts. So when it happens, if it happens all at once and they do an emergency rate cut, because the new guy that Orange Man wants to appoint says he will do what Trump says. Trump says the Fed rate should be at 1, right? Or possibly 0. So fantastic for the economy. But I believe that if he did that all at once, the market would get obliterated. right? It's the same theory over here. This is the best thing that I can use. If we come over to space, Virgin Galactic, who remembers this back in the day? Let's go to a weekly. Okay, space. Ignore all this over here. All right. Hey guys, let's see. In June 21st, we're going to have, June 22nd, we're going to have a launch. And everyone's like, what was that? You guys are going to launch? Are you serious right now? So they load up in anticipation on what's going to happen. And we rally. Go from, well, this has been split, so the price was never this. I remember it being like from 25 to 60 bucks, 61 bucks. I remember it perfectly back here in 2021. But 284 to 1400 bucks, right? It was a different price back then, guys. But anyways, we rally. And then the launch happens, right? So the launch happens over in here. And when the launch is successful and nothing bad happened, the stock plummets. And you're like, what? Right? Which is probably what will happen November 1st when the tariffs go into effect if they do. If they don't, we rally. If they do, we rally. Everyone's going to think we're going to go down. No, we're going to go down pricing it in. Just like it priced in here, the launch of Virgin Galactic, where you fly up to space at the edge of it and you float around and they give you a barf bag and you puke in it for $250,000, which is the stupidest thing I've ever heard of in my life. I can't believe someone would do that. I'll go on like an Epcot ride for like $150 ticket where they have that space ride and be like, all right, trick my brain. I'll be like, I went to space. I just cannot believe that. But anyways, same thing over here. We're going to do a launch and it rallies and there's a launch and it dives. It priced it in. So if it didn't run and the launch was successful, then it would have made this move, but it priced it in prior. We're going to probably price in the tariffs coming to help explain to you guys. And the fact that if we get the new Fed chair in, hopefully he understands how the market works. A lot of these guys aren't traders, but it doesn't matter. Some of them understand they understand what would happen if they did that. If they're going to do it all at once, emergency Fed meeting, and just like cut real aggressively, like a 2-point cut or like a one point cut or 1 point cut plus, the market could do what it did prior on SPY over here. If we go back to a monthly chart and I go ahead and zoom in here, okay? Let's go ahead and zoom out. There we go. Right? Hiked interest rates, cut them. What happened? Hiked interest rates, cut them, and we dropped. Hiked interest rates, cut them. GFC. Boom. Started cutting them over in here. Right here. We were cutting interest rates. And it dropped. Hiked interest rates. Boom. Hiked interest rates. What I think is going to happen. But I think this is going to happen. We're going to continue to rally November, December, January. We get a new Fed chair. Ride and walk away May. Right? And I think that we could have a blow off top and then there may be a rally. At some point, there's going to be a blow off top. I don't think that was it, where we're going very aggressively up on the S&P and everything else. I don't think that was it. I think that we're probably going to continue to rally and that trigger, that switch will flip in November and we're going to rally up all the way into the 2026. And at some point, there's going to be a blow off top, a drop, a correction, and a correction from that drop. And there could possibly be a very, very big drop next year. And everyone's going to be confused. What? In COVID, we cut interest rates and we went up. The market was at the bottom, bro. We weren't at the top up here. Right? That's it for this video. I'm going to do a watch list just to give you guys some education. The tariffs that we're dealing with right now and the superpower that we're dealing with China, where now they're like an adversary, even though we built them and we saved them. China the people were starving. They were starving, and I can't say to the point to where they were expiring. And we saved them. They're people, and it's like it's wild. Clinton started the trade agreement. I can't remember. It's an abbreviation with a couple letters, and where we had cheap labor go to China. We started trading with them. We made them a superpower, and that allowed companies to be profitable, more profitable. So that allowed companies to be more profitable, short-term gain for long-term issues, which we're dealing with now in a trade war, 25, 26 years later, 27 years later. Bush continued that. Bush and Clinton both continued that. This isn't what necessarily led to the dot-com boom. There was other factors at hand here. Um, so, but we're dealing with that right now because of decisions that these two presidents had made. Not good, and it took American jobs away. So now, obviously, they didn't think that this was going to happen. So we can't completely be, that upset with them. That this wasn't their plan, is for all this to happen, but that was the side effect of it. So, anyways, I do expect us to rally to sum up this video into the end of the year. October is going to be bad since we didn't have a bad September. We're having a bad October. And I believe that once the tariffs go into effect, then the rally will start. And I expect us to, in anticipation, the catalyst for rate cuts in November. Then we got rate cuts in December, and then we have the catalyst of Mr. Too Late getting out, and a liquidity injector like Mega Man, like superhero, um, is going to come in, and I think that that's when we are probably going to have we could have a very serious situation on our hands going into next summer. I may be wrong, but this is what I'm predicting will happen. I think there's going to be a big crash next year. If you guys like this content, make sure to like and follow for more. I'm going to follow this video up with our watch list for next week.